here's what I want from Alpaca. This is a conference, but I want a hat that is an alpaca, like one of the heads. Like it's fuzzy. Would that be cool? That would be really cool.
All the way down, and then you
yeah.
in the middle. Okay. All right.
You see it. You see the vision. Welcome to Chainlink Live. My name is Andy Boyan with Chainlink Labs, and I'm here talking to Alpaca Finance today. Alpaca's recently integrated Chainlink Price Feeds, so we're excited to talk to Pete and James from Alpaca to kind of get an understanding of what Alpaca is, learn a little bit about leverage and yield farming, and of course, how Chainlink is integrated and what that does. And if we get talking about DeFi and other stuff in the meantime, well, so be it. All right, guys, I'll let you take it away. What is Alpaca? How do you guys, how are you distinguished in the DeFi landscape?
Okay, all right, I'll take this. So basically, we're a lending platform on BSC, on Binance Smart Chain. And unlike other major sort of DeFi lending platforms like Compound or Aave, we focus on under-collateralized loans, and we're the largest lending protocol to do so, with around sort of 1 billion TVL. Obviously, it's moving around at the moment, but yeah. So we can offer under-collateralized loans safely because basically the borrowed assets have to be used on platform for leveraged liquidity mining.
Okay. Dude, this is cool. Let's stop right here because I want to back up and make sure people understand this, because this is one, there's a problem with collateralized loans in DeFi. Most loans in DeFi are not over collateralized, but they're like really high collateral rate. Like you can't borrow very much compared to what you put in. Or you can borrow half as much as what you put in. You got to be really, really careful with that amount because these systems are permissionless. There's not an ID or a credit score or anything associated with them. It's this collateral. You deposit it into a smart contract, which is pseudonymous. You don't necessarily know who it is. And so if you default on that loan, that collateral serves as a reserve to liquidate and therefore pay back your lenders. Now, Alpaca is different. So this under-collateralization is a problem people are trying to solve. Can you say once again, like, how do you manage to have under-collateralized loans? I think that's a really important point.
So basically, like, we can offer them safely because the borrowed asset have to be used on platform for the liquidity mining aspect, right? And so that allows us to offer better capital efficiency and then obviously higher APYs to lenders as well.
That's awesome. So if I go to Aave, great platform, I deposit some ETH or whatever, I can borrow a stable coin and I can take it wherever I want. I can take it to Uniswap, I can trade it for something else, I could go all over the place and use that how I want to. I can cash it out and send it, USD to my bank and say, hey, I'm good.
Yeah, exactly.
But for you guys, you keep it on the platform, and that restricts where people can move things, but it allows you to have APYs you mentioned, and it allows you to ensure that like the funds are staying there so that you can have under collateralized stuff.
Exactly. I think what also makes it special is that at like a user level, like Alpaca acts as a profit enhancing tool for market makers who want to provide liquidity on exchanges, right? So if a user wants to LP on PancakeSwap, Alpaca can loan them assets to ramp up their positions, and so APYs, we can go up to sort of 6x.
That's significant. All right, let me do a backup again, just in case we get new people, and to say what an LP is. So in decentralized finance, if you've got a decentralized exchange, if I want to exchange two assets, let's just say BNB and USD or USDT Tether, it's like a stable coin for $1. If I want to exchange those two assets, somebody needs to provide the liquidity to let me make that exchange. In centralized exchanges, most normal exchanges, there are market makers that supply that liquidity and they're part of the business model. They get a cut of the fees. In decentralized exchange, the liquidity providers, those market makers, is whoever wants to participate. And so in order to get people to participate, contribute those funds to be used in exchange, protocols like Alpaca or all the protocols basically give additional rewards to people who will stake those funds and let them be used. So for Alpaca, can you explain that again? Alpaca can LP to other protocols like Pancake?
Yeah, I'll let Pete.
Yeah, that's right. So Alpaca essentially sort of, we call it zaps a transaction. So if somebody is doing, let's say, like we'll talk about it in a bit, but market neutral pairs, so let's say USDT, USDC, or another sort of stable coin, we zap the transaction where you could go in on one side 100% or 50-50, and that goes out to an AMM like PancakeSwap or also Volt. swap as well. So but those are the two that we're doing at the moment. And as we go and look to do multi-chain, it's a very similar approach. It'll be leveraging relationships with other dexes, but same workflow.
Do you do single-sided LP?
So yeah, there's one right now with a syrup pool, so on PancakeSwap, which is true is kind of one-sided. But you can also where Alpaca is quite neat is that if you want to do, let's say you just have USDT, but you want to do like a USDT BUSD pool, then we will essentially proportion that out in a single. We'll zap the transaction and go from, let's say, 100 to 50-50.
That's cool. I'm going to leave off the talk about impermanent loss for a different, like you guys, audience, go find another one where we talk about it. But it's a really cool thing. So that'll be an Easter egg as people kind of delve into Alpaca a little bit to learn how you guys are managing that. That's a cool innovation. One of the other things that I've read about is leveraged yield farming. Now, I think this is kind of what James was getting at as it stays on the platform. Can you guys talk about well, what is the leverage, and then how is it used in yield farming? Yield farming is what we were just talking about. Like you deposit it, and then those funds are used to supply LP, and then you get rewards on that. That's your APY. So how does leverage play into that?
James, you want to take that, or should I?
Keep on cutting out for me.
Okay, yeah. So in terms of leverage, essentially boosts your yield at the end of the day. So that's where like the lent assets come in. So if you're with Alpaca, you could do a just straight 1x yield farm on a variety of sort of like small, medium, large cap pairs. But the one thing that I'm looking at sort of the institutional side of Alpaca, and the one thing really interesting to let's say funds and those type of sort of institutional players is, okay, let's look at market neutral positions. And because market neutral meaning there's no, if there's asset fluctuation, that there's no loss or no issue there because you're using stable coins. And through Alpaca, unlike others, you could do a straight farm. You might get single digit yields. But the way leverage, we lend the funds to you in that transaction, and that boosts your overall yield. So there's the sort of gross APY, and then with the pouring of funds, it nets down to a number. But fundamentally, that's a lot higher than what you're going to get from just no leverage yield farming.
So I think people are most familiar with leverage, where instead of buying an asset, you basically borrow to buy more of an asset, double or triple or whatever the amount of leverage is of an asset. And then you wait for that asset to hopefully appreciate in value, and then you cash out and you have more than when you started. So you pay off your loan and you gain profits from the asset appreciating. But this is different because you're talking about stable coins, which aren't wildly fluctuating. Hopefully, they've been good lately, and that's good. So you're essentially borrowing more stable coins based on your collateral deposit to earn double the yield farm or triple or whatever it happens to be. So is that common in enterprise? Like, is enterprise finance been doing that already in centralized platforms, and I'm just not aware of it?
So it's like if you're going leverage long on any asset, it's a similar approach, right? So if you're talking, sexes like Binance, you can go leverage long. In this case, it's a yield farming position, and what this kind of opens up to. I know I'm talking stable coins, but we work with the top tokens through to others that really what this is it's for people looking for profit seeking strategies. There's various risk appetites. So if it's stable coin, the risk is fairly minimal, and then it kind of goes further up the chain depending on the underlying asset pretty much. So if someone's chasing high yields, we can offer a fair amount where you opens a leverage farming position with your favorite pair. You can go short or long, or as we've been speaking about, the sort of market neutral strategy with stable coins.
All right, Patrick in the audience has a nice comment here. You pay interest on the leveraged portion, so your yield needs to be greater than the APR. That's the APR being the fees, the interest that you pay. That's the goal. And the the yield farming platforms, they're doing this because of composable yield on Pancake Bunny and these other platforms, and that yield farming, yield aggregator essentially tactics. Great point, Patrick. Of course, now this changes, Patrick, because it's not just your yield once you're dealing with assets other than stablecoins. If you lever up on BNB, for example, and the price of that wildly fluctuates, that changes your risk appetite significantly, right?
I think one of the key things as well, right, is what Pete said about being able to go short with leverage, right? So it's especially in this type of market, when it's not just like a long only market, like it's having that possibility to sort of play both sides of the market or play a completely neutral strategy, which is something that not many other places can offer.
Yeah, the market dynamics make leverage games change quite a bit, as opposed to a couple months ago when it was just like up only, right? And you hang out. So I gave you guys this question. I thought about like the meta of yield farming. Are there optimal strategies right now that people are taking that happens in your community that people are finding that you're aware of? Or is it kind of like come one, come all, everybody finds their own and keeps them proprietary?
Yeah, so it depends with the market the way it is at the moment. Like with what James mentioned in terms of, let's say, taking a short position, where if you're in a, let's say, a BNB, BUSD farming position, basically what you'd look to do is you'd look to borrow BNB in that strategy. But I think when things are kind of walking sideways and it's kind of unclear which way things are going to go, then market neutral stablecoin pairs, forex leverage 23-24% APY through Walt Swap is sort of the way that people can kind of hedge against any sort of change in asset price. But if you on sort of if news comes out and flood and whatever, then you can take that short position by doing stablecoin on one side and then the other asset borrowed on the other.
And just to add to that as well, I think we have like a really good community, especially in our Discord, which these guys are constantly chatting about different strategies that like the meta strategy out there, which obviously changes over time. And we have kind of like just a bunch of people discussing this at all times, sharing documents, sharing spreadsheets, which is awesome.
That's awesome. Great to have a good community. There's links, of course, to the Alpaca community down in the YouTube description. Go join those. Check out their communities. Hey, there's links to the Chainlink communities as well. Speaking of Chainlink and Alpaca, that's why we're talking today, is Alpaca's using Chainlink Price Feeds. So can you guys talk a little bit about the price feeds? Like, what do the oracles do in this situation?
Sure. So what Chainlink does for us is it secures our price feed for liquidation. So when we're talking about leverage, if assets do move fairly quickly, then there always is a potential to be liquidated from your position. So, our infrastructure and system model for liquidation is fairly advanced for where the market is. And, we have protections around if there's potential flash loans or price manipulation or flash liquidations, that's where Chainlink really kind of secures us in a way that it's very, very important that the correct prices are made available to us and also our users. So when things, let's say in May when the market dropped fairly quickly, if your oracle and your price feeds aren't like Chainlink, then you could have a discrepancy. And also if there's an attack on the protocol, there can be discrepancies which, result in things that shouldn't happen to our users. So, they've been really great, Chainlink, to sort of to secure that for our users and for Alpaca.
So if I've got collateral in securing my loan and the value of my collateral changes, it gets too low, I can get liquidated. And that collateral gets taken back by the protocol and says, hey, we've got to redistribute this. And that's just like a risk. That's part of lending and borrowing that people need to be aware of. It's a real risk. But if you're going to get liquidated because the value goes down, you want to make sure the value actually did go down, right? You want accurate prices. And if you have inaccurate prices, if somebody manipulated the feed, then you're gonna be mad. You lost your like that's theft, right? That's basically theft, and you've been manipulated in some way. That's what Chainlink is all about. That's what the price oracles are exceptionally strong in, is providing those really secure oracles secured by decentralization. So I'm super glad to see such a high TVL project on BSC. Awesome that you guys are taking kind of a unique approach to leverage, to borrowing. You've built this great community that is obviously still growing as well, and that you're securing your users' funds. So that makes me really happy personally, because I'm a Chainlink fanboy, of course, as well. We do have a question about NFTs. So yeah, we can see your questions, you guys. So if you want to ask them to the Alpaca fellows here, we will take some questions. I've got a couple more, as always, because I'm a DeFi nerd and I've been learning about Alpaca. I don't know how to say this name. Kiovin. Sure. What's the future plan for NFTs? I heard utility will be added. There is a rumor floating around about NFT. Oh, I got somebody else. Do you have any Alpaca NFT for us today? Oh, see, people want to know about these. What's the deal with NFTs and Alpaca?
Sorry, I cut out for you for a second.
What's the deal with NFTs and Alpaca? Do you have a plan for them? Are they online now?
Yeah, I mean, we have a platform. We have existing NFTs at the moment, so we have some pretty cool little stories that we've produced. We've done some kind of promotional NFTs, but we are looking to add utility on the sort of yield farming side over the next few months as part of our roadmap, and it's something that we're doing quite a lot of work in at the moment. But the guys who produced them have done some pretty cool little stories. Alpacas are great for producing these kind of things. So yeah, for sure you'll be seeing some utility NFTs sort of probably in the next 2 to 3 months.
Wait, you don't have to say what the utility will be, because I'm sure that's still under work. What does utility mean in this case? You can use it to do something. What do you do? Yeah,
so it could be anything. It could be enhancing APRs, APYs. It could be just purely from a community perspective. Like that, there's a lot of different things that we could do. I don't want to let the cat out of the bag, but there's a lot of different things that we can look at there, and that we are looking at.
Yeah, I've seen DeFi projects. I'm not speaking for Alpaca. I want to make this clear. These are just things, NFT utility and DeFi protocols that I've seen, but enhanced APY or different rates of APY. In some places, I'm going to give all your engineers nightmares now. Some places they do it where if you're the original owner of an NFT, and when you sell that NFT, instead of just getting commission on the sale, you also get commission on the APY going forward, which, like, if you forward sell that a million times, like, that's crazy ideas. Really fun, composable, weird stuff. And of course, it's all in like the shape of llamas and stuff like that. What's the difference between an alpaca and a llama? This is my question. Do you know? Are they the same thing?
I have no idea. I think alpacas are just aren't they a different color or something? I think alpacas are cooler anyway.
All right, alpacas are cooler. That's what we know. I've been to an alpaca festival at some point. One of you has a siren going on. Is everybody okay?
Yeah, it's just being in a big city.
All right, I've got a man from the city. You guys have come up pretty fast. BSC launched this year, right? And Alpaca launched not long ago. What are some of the changes that you've seen over the past couple of months in yield farming, and what people are expecting and thinking about? Keeping in mind, this is against the backdrop of being launched in a pretty accelerated market to a pretty significant downturn, and now a sideways motion absolutely will affect this. But is there a mood in the community or among developers even in DeFi and yield farming as to its future and where it's going?
Yeah, so I think it's changed a fair amount, and yield farming as a whole has sort of really emerged as one of the core use cases for DeFi, and also for new protocols to bootstrap user growth. I think anyone that's been through other potential or bear markets, knows that when things are going up, everything's easy, and when they're not, that's not such the case. And I think the biggest change is we're seeing kind of happen, right now, where retail, and to be fair, institutional users are discovering that long only yield farming isn't going to be forever profitable. And that was sort of obvious in like the mid-May crash. And if it keeps going, we had a nice little bounce today, but if it keeps going, that's going to be even more apparent. And the problem with yield farming on DEXs is that you fundamentally have to hold all your assets long, meaning like that you're expecting them to appreciate. And if that's not the case, then sort of like the current market for yield farming is unsustainable and bearish conditions. But I think what we talked about prior about sort of with Alpaca, that the fact that you can sort of go short or you can go long. There's sort of other things you can do around hedging, which is a bit more advanced. But what that really means is that you can yield farm profitably in all market conditions. And I think this is especially useful for market makers and even retail liquidity providers as they become more seasoned and sort of the user interface and user experience of DeFi still has a far way to go. But as they become more seasoned, they'll figure out ways again to sort of leverage a platform like Alpaca to be profitable in a non-bull market.
I think this is actually really insightful, Pete, is this idea of when things are going up and you pay rewards and governance tokens, everybody's happy and it's easy. But as soon as that stops, it's also pretty easy to pull things out, right? And so you can kind of get these market cascades and whatever it is. Both directions can cascade. So what is it about DeFi that can keep an institutional investor or somebody really significant in the market, give them a reason to continue LPing during a market downturn? And that's what I think is insightful is now, well, let's give them other options. And it's still a very new market. Like we're still very, very early. It hasn't matured, so we might not be there yet. But those are the opportunities, right? They need a reason to stay even during a downturn.
Yeah. Sorry, James.
Okay. I was just to say basically that you can kind of see it from the TVL. I think actually one of the questions was something about what is the current TVL. So we're about 1 billion at the moment, but you can see that even through this downturn, we've been hit kind of a lot less than some of the other protocols out there. And I think that that's because there's enhanced functionality about being able to yield farm in different kinds of markets.
Yeah, it's also, we're talking about, again, it's the question of like institutions or why to sort of yield farm these conditions. So those market neutral positions where there's kind of a mixed bag. So if you believe in sort of one is the protocol and also the project, and as James mentioned, as this downturn has come, like Alpaca's weathered the storm really, really well, both from like a token price and also from a TVL in comparison to sort of the market. And when we have institutions, they're really looking for good safe yield ultimately in these sort of markets. And I wouldn't be surprised, which is sort of what I'm working on, is when I'm bringing institutions onto the platform, is they're really focused on market neutral, but as the market turns around, that will expand out to other large cap, crypto, and sort of like leverage yield farming on those, just because like the risk is mitigated in a bull market fundamentally.
Yeah, good safe yield. And we can see the pathway for bullish adoption if we can get through these regulatory hurdles that are, of course, coming down the FUD pipeline. But hey, that's life. Guys, it's been super awesome getting to this. We need to have a panel about that thing we just talked about, because this is a really insightful topic. I'd love to bring you guys and get your thoughts along with some other DeFi founders, because that's right. That's one of the major next steps in building utility is getting them to stay and giving them a good reason to, and then watching how does this affect overall market dynamics, because still it's a growing industry. It's a sizable industry, DeFi, but it's still pretty tiny compared to everything else. A lot of room to grow. Sure. Before we ship off, I want to give our audience a chance to ask any additional questions. But why don't you let us know what's on the roadmap? What's coming up in the next couple months for Alpaca?
Yeah, so one of our main focuses at the moment is multi-chain. So we're entering sort of discussions with various other chains at the moment to figure out where we should add our platform to next. At the moment, sort of DeFi is at a stage where there are a lot of chains that are showing potential, but it's very competitive, which is why you see sort of only one DEX with decent TVL on the entire network, which isn't really enough to entice users or developers to go there. But we think, Alpaca can multiply pretty much any network's TVL and improve trade execution. And so we're sort of making moves to look at that in the foreseeable future. And Pete is looking a lot more at the institutional side and having some pretty productive conversations with some institutions out there about parking some funds with Alpaca.
We like the I word around here. Anything you can drop, Pete? Any NDAs you can get past?
Yeah, so it's a lot of it. It kind of goes into a couple different buckets with institutions. They're either deploying already, so like we have a really great safety score through DeFi safety and just through our audit. So a lot of it is putting a face to the name of the company, and if they're on BSC already, then that's where they really like those leveraged market neutral positions currently. And then as we go cross chain, that kind of opens up a lot of different avenues and different ways. And apart from that, I think with Aave Pro, they went the whole walled garden approach. But the question there is that necessary? What size of institution feasibly is going to use it as a sandbox? So are they just going to play around with it and then get more into DeFi as they go? Or, from like, not to bore people with like, regs and whatever, but with institutions, they have to know their counterparties, and in DeFi that's not the case, right? So that's what the Aave Pro solution gets around. But we'll see. The conversations so far have been really strong, where they love the market neutral yields, they love the safety score, and sort of the track record of Alpaca Finance. So far so good. And we'll look as we go. Like we do bespoke strategies as well for the right counterparty to leverage, let's say, like a yield on like a certain currency, and we leverage Chainlink there to give us accurate price data on said pairs, right?
Cool. Yeah, very exciting stuff coming. We talk at Chainlink Labs, we talk a lot about the flywheel and how, once things get moving, like once there was enough money in blockchain to start hiring people out of finance, to start being able to have the conversations, to hire developers were first, actually, probably developers build the stuff that funds the infrastructure that's actually secure and real. And now those conversations with institutions start, and eventually enterprises, and eventually the world. That's where we're going, right? Sure. Exciting stuff. And guys, it's been awesome having you on, putting some faces and names together with Alpaca. I pitched, I don't know if it's before the break, but I pitched Alpaca swag that'll be like a wool cap that you can pull down. That's the little Alpaca logo. Oh man, I actually pulled out this thing because I don't have it here. But I was going to show you the audience your logo and stuff like that. I don't have it, but go look and find their stuff because their art is really good too. It's cute and memey and nice. Very well done. Props to your design team. So that's going to be my call to you, audience. Head down into the description and go check out Alpaca Finance. Follow them on Twitter. Join their Discord. It seems to be a very popular place with their community, sharing lots of strategies. Good place to get that alpha. Guys, anything else before we sign off?
No, thanks for your time.
Thanks for having us on, Andy. It was great.
Yeah, let's talk again real soon.
We'll get you that.
Hey, everybody. This has been Chainlink Live. Thank you very much. Again, my name's Andy Boyan. You can follow me on Twitter. Go find my podcast. It just came out, Chainlinked, a Chainlink ecosystem podcast. You can find that via Chainlink today and any podcasting platform. Also, do me a favor, like and subscribe this video series, the Chainlink YouTube channel. We've got Q&As coming out a couple a week. I've got another one tomorrow at the same time. So please come back and hang out with me. Eventually, I'll figure out how to give away swag. And so regular viewers, you'll be well rewarded. But hey, man, I appreciate you guys coming on and hanging out with us. Please join communities and stay involved. We'll see you guys next time on Chainlink Live.